Welcome back, everyone, to another installment of our Southern California first-time buyer market update. My name is Stephen Meade with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. And we do that by helping clients primarily in Orange and Los Angeles County. So if that is you and you are interested in homeownership, you'd like to have a plan for homeownership, or you need a house yesterday, absolutely reach out to us below and we can help you out with that. So we're going to get started here and we're going to talk a little bit about the way the market is going, what we think is going to happen here, and then kind of some questions about kind of the overall themes. And I'm going to tease something for you. I normally don't like doing this, teasing a future video that we're making in this video, but we have a really cool video planned for you that's going to come out on Thursday. So if you are not subscribed, if you're watching this and you're not subscribed to our YouTube channel, absolutely like, subscribe, and hit that notification bell. You will see that video when it comes out on Thursday of this week. So without further ado, we're going to get started here. And the first thing we're going to talk about is we're going to talk about prices. So one of the things that's been a recurring theme in this market has been this idea that our market has been largely impervious to some of the bigger macroeconomic changes. What am I talking about macroeconomic changes? Well, we're talking about inflation. We're talking about interest rates, which are closely related to inflation in a lot of ways. And, we're talking about why up until now, that's had some of an effect on the market, but it hasn't really had a huge effect on the market. And a big reason for that is because we have a lot of sort of secondary and tertiary effects, meaning when interest rates go up, yes, that reduces buyer demand for houses, which you think would make prices crash. The reason it doesn't is it also reduces the number of people putting their homes on the market. If you owned a home and you had an interest rate of 3%, would you be likely to sell that house or rent that house out if you could instead of selling it? So you can see why that kind of has kind of these multi-layered effects. But we are actually seeing, interest rates have jumped rather dramatically. And by dramatic, I mean in 6 months' time, we have essentially almost doubled our market interest rates. And we are seeing some results of that, right? If you look at this graph here, this kind of shows our what we're calling our first quartile prices. That means it's the median of the median. So it's halfway between the bottom and the median. And we do that to sort of approximate an entry-level market. And our blue line here is an entry-level single-family home, 3-bedroom, 2-bath in LA and Orange counties. And then our red line is an entry-level condo, 2-bedroom, 2-bath. And what you look here is, if you look at this, you see back here in October of 2021, we saw things were flat through the fall. They jumped through the spring. And then as rates went up, the prices did start to moderate and ease. And we see that kind of in both of our categories. And where are we now? Well, honestly, we're not that far apart from where we were maybe a year ago. So, yes, we've kind of erased where the market has been in the last year. I think that's a good thing if you're a first-time buyer, right? That means you have more accessibility. Unfortunately, though, is it comes with interest rates that are significantly higher. And that means that your payment is going to be higher. And that's what I want to talk about here is there is a notion of something called a payment ceiling. And, the lay way to discuss this is you'll hear people talking about prices can't go any higher because people just can't afford it, right? I think that's a refrain that maybe we've heard for the last 2 years. But this chart really does show what we're talking about here, right? This is our total monthly payment based on 30-year fixed prevailing rates, 5% down, including mortgage insurance, everything on that theoretical entry-level home in LA and Orange County. So again, our blue line is our single-family home. And what do we notice if you look at this graph, right? At one point, this payment was down a year ago, $3,900. It accelerated, and then look what's happened, though. All the way since April, it's really been bouncing right around this point, right? This is sort of an equilibrium point, right, where the market is, and it's around $5,400, $5,500, $5,600 a month is sort of where that number is. And when you see this, this is definitely a ceiling. You'll notice that the market is really resistant to going too much higher than this. If you look here on our condos, We do see it's broken a little bit of new ground. I think that's kind of interesting. One of the things we've talked about in the past is condos as a property type are going to be more popular, more common, more accepted in Southern California. This is a reality due to the need for higher density. I think you're going to see more and more people who live in a condo or a townhome through multiple properties, right? So, traditionally, the way our market worked was you would buy a condo because you couldn't afford a single family home. And then as soon as you could get into a single family home, that's what you would buy. And, what we're seeing is that those habits are changing. That's not everybody, but that's a lot of people are saying, I'm okay being in a townhome permanently. So I think in the long run, we are going to see a stronger condo market. If you look at our minimum household income required, we're right here around $111,000, $112,000, and we are right around that between that 130 and 140 mark for our entry-level single-family home. This is minimum household income, assuming no other debts. And then here we get to the data that I think is a little bit more current. And while if you look down here, this was kind of the shock of high interest rates, then interest rates eased. What happened? We saw a little bit of a bump, but now we're at 73% 14-day absorption rate on our entry-level single-family home and 68% on our condo market. These are definitely a lot lighter than some of the numbers we've seen in the past, so these are a lot less competitive. But this does mean you are going to see multiple bids on the popular houses still. But what this tells me is that, yeah, I think the market is readjusting to these interest rates. There is definitely an opportunity for people to get into a market like this. I think, if you're a first-time home buyer, if you need to ask for things like closing cost credits, you have a much better ability to do that when these absorption rates are around here than when you do when they're in the 90s. That means everything gets a bunch of offers on it. This means some things will get multiple bids and other things will not. If we look at our inventory, this is a bit of a curious case too. Inventory is flat. You saw that it crested here right in July, and then it started falling quickly, and now it's kind of leveled out. And that's even a little different than last year. Last year we were kind of in this gentle downward slope here that you can see. So why is our inventory leveling out? And is leveling out really mean that it's sort of de facto increasing because we'd expect it to be falling around this time of year? I think a big part of this is you still have sellers that are adjusting to this new market. And I'm going to go off share because I think this is an important point to make. And this is very regional. This is neighborhood dependent. The successful sellers in this market are the ones who are pricing their homes to sell, and they are pricing them aggressively, and they are letting the market bid them up to where they need to be. So on these homes, we are still seeing multiple bids, especially when there's a home that will have demand, right? It's generally a nice house, or if it's not a particularly great house, it's in a very desirable area. And I think because of that, that's kind of an interesting strategy that you're seeing. The other strategy we're seeing is sort of holding on to the way things were 6 months ago. We're seeing a lot of this in South Orange County. We're seeing people come up with list prices that are the same list price you would have seen in June, right? And that is no longer an accurate list price in this market. We're especially seeing this in this kind of, $1.2 to $1.7 million range. And those homes are generally sitting. The ones that are moving are priced to sell. And when they do that, they find buyers quickly. So I'm going to jump back in here. If we look at our 14-day still active percentage, you notice that same kind of thing. We ended up getting to this plateau. I think with the recent rate increases and then a little bit of a pullback that we saw last week, consumers are still getting used to the idea. Buyers are still understanding what it means to be in a market where interest rates are in the mid to high sixes for 30-year fixed. The good news is, and this is a bit of a bright spot in our market, if you can qualify for jumbo financing, there are some opportunities to get jumbo rates for a 10-year ARM, which is a loan that's fixed for the first 10 years, to get those in the mid fives. That's a huge boon to your payment. So, what we're seeing here is some stability. There was an upswing the last week. You'll notice this stuff tends to flip right back and forth between that 80 and 90% level. Again, higher is less competitive. We go to one more chart here. This is our supply of homes. This is another sign, right, that we're going into a fall where things are naturally slowing. And also this latest round of interest rate increases has rattled buyers a little bit, right? And it takes them a little bit of time to get used to that. So you see our inventory level in condos has gone up and a little bit of a rise on our single family homes. We're still in kind of this range that we've seen things, but you know, I'm kind of a funny person. I'm an optimist, right? And I look for the opportunities in everything. And to me, this time period where consumers are frozen and figuring things out has always been a bit of a unique opportunity, right? When people are tentative and uncertain, I think that's when you can catch a seller, especially a seller that needs to sell, off guard. And they might accept something that they otherwise wouldn't because they get a little bit panicked. I think that's the exact perfect time to swing out on some of those properties that might have been sitting where the seller is getting ready to do a price reduction but hasn't quite done it yet. This is the reason why it is so important and why we do this with all of our clients. We actually reach out to the other agent. We say, where is the seller right now? And a lot of times they'll say, we're thinking about a price reduction. We pitched them a price reduction, but they haven't said yes to it yet. That is the perfect time to buy. And that kind of wants to segue into a video that we have coming up that's going to be released on Thursday that is just for first-time home buyers. And that video is really about markets and sort of the three things that buyers are looking for in a market and why that mentality of looking for those things will often kind of lead you down sort of a bit of a silly path, right? One that is based on biased decision-making, which is kind of a bit of the enemy, right? When you're trying to make good decisions for you, your family, and your future. So definitely stay tuned on Thursday for that. Do not forget to like, subscribe, hit that notification bell. Questions, comments, we love them. And as always, if you are looking to become a homeowner, or, and I'm betting for almost every one of you, there's someone like this in your life. There's a person you know, they make good money, they are renting, they complain about renting. Absolutely steer them in our direction. We would love to work with them if they're in the Southern California area. You can reach out to us by commenting on YouTube, or we've got some contact information below. We'd love to hear from you. That's all I've got, everyone. Have a great day. We will see you again real soon.